Before you could stay on, I am Pius Kojobaka, looking at our stories. The current tensions in the Middle East could have some serious impact on the economy, and one can talk about sudden rises in fuel prices and even inflation. George Yafe has more in this report.
Crude prices have started rising on the international market and is currently trading at around $74 a barrel. And even if you don't add the 1 cedi energy sector levy, prices at the pumps are set to go up from next week. We should also not forget about the impact of this on transport fares going forward and how that could also affect inflation, which has been on that downward trend. Others are also worried about how the current trends could also impact on the Ghana cedi. And for some, the current development represents a real test of the economy and whether we have indeed built the required absorbers to help withstand these shocks.
All right, so let's explore this angle further as we've been joined via Zoom by the Executive Secretary of COPEC, Duncan Amoah. Duncan, thank you so much for making time to speak to us here on Business Live. And first of all, I want to understand how concerning is the current tariff war in the Middle East to importers like Ghana, for example? Unmute for me, Duncan.
Sure. Hi.
Yeah, so I'm asking you to tell us how concerning is this development for importers like Ghana?
So, Pius, this is what is happening now. Geopolitical factors or influences pushing international market prices up on the international market as far as crude is concerned. And you know, for petrol, diesel, Kero and all other products, crude forms a very strong basis for pricing. And so a situation where within the past 3-4 days, you've seen crude jump up by as much as $10 to $12 a barrel, which we haven't seen in a long while. The net effect is that the reductions Ghanaians were anticipating for the second window, June, might be denied. And that would simply be because you and I would end up with a situation where the currency is stable, but international market price, IMP, would have.
I was even coming to the impact of this development on prices, and you are saying
and that net effect would simply be an increase.
Conclude that for me, Duncan. We lost you briefly.
Yeah, so what I'm saying is this, Pius. There is every indication as of today that we may not get the reduction that we had anticipated at the start of the month. Things are not looking very good internationally. I don't know how soon Israel will decide to terminate whatever confrontation it has with Iran, but if that escalates a little quickly, don't forget Iran not long ago happened to have been the number 4, number 5 as far as the global exporters league is concerned. So they produce quite heavy. If you have instability with them and they are unable to contribute to the global 100 million barrel daily supply, you would simply get a shortfall, and that shortfall would lead to a skyrocketing price, and that is what we are seeing. So I have said earlier in this conversation that there's a tendency that the reduction Ghanaians would have expected to offset the 1 Ghana levy soon to be added to fuel might be in jeopardy at this point due to the geopolitical influences. That's a heavy one.
And that's going to compound issues basically when it comes to, cost of fuel and its attendant effects on transport fares, right?
Yes, Pius. So, per what we know as of now, we've not seen crude even do $3, $5 within a window. You've done over $10, $12 within the past 3-4 days. That's quite concerning. And what it is likely to lead to is that flat prices could soon surge, and that will mean that whatever reductions that we would have expected to offset the levy to be introduced effective Monday, Tuesday, we are probably not going to get the offset or the mitigating situation happening. Rather, if international market should add any 20 pesos, 30 pesos, you are simply going to see your one city with the 20 pesos, and whatever the AOMCs would also decide 10 pesos. So it probably could be quite significant the following week.
Duncan, how best can government cushion consumers from these expected shocks?
Pius, it will bring me back to conversations we've had severally on your network, the need to store products. Geopolitical factors are quite uncertain. Ghana has not much say what happens or prevails internationally. And so if you have a situation where things just happen very fast and it would affect prices and it would affect your pump prices locally and it would affect your economy, your only safeguard measure or mitigating measure is to ensure that you have enough refining capacity. You are probably storing or buying crude for the refineries. You are also empowering an institution like BOST to buy products and store, because if you don't have any strategic stock and you simply continue to be a price taker, as we have been over the period, whatever happens internationally or geopolitically, you would simply pay for it down here. And I don't think that we should wait any longer. The time to store should be now. The time to also boost our refining capacity. We should contemplate those things. If government would need to find some additional investment to be able to bring these institutions to their optimal levels, I think that we should be able to do that. Otherwise, like has been indicated, geopolitical factors would almost always mess up your economic plan, because once fuel begins to go up, transport fares will most likely, the 15% they give, they are likely to come back even asking for more. That will mean that increased costs in goods and services. And I'm not sure a government that has done so well at this point should wait for these shocks to wipe out every gain that we would have chalked within the past 6 months.
And should this be an interim measure?
No, I think that it should be an urgent or immediate measure if the government would want to see a situation where these international price shocks do not affect the local economy negatively. You may need to do something about this, and it has to be immediate. As I speak with you, prices may be going up globally. I don't know how sustainable that would be, but that again would depend on whether Israel sees reason in halting whatever attacks they want to embark on with Iran. And then again, Iran is also nuclear rich. Whatever retaliatory bits it does with the Middle East and unsettling, we could be in for some run. And then I'm not thinking that government should take these things lightly. Empower both to be able to save productive or store productive they can. Empower your local refineries. If Tor cannot come on stream immediately, Central is in there, Platon, Akwaba. You may be looking for crude at this point for some of them to be able to save at least. If you wake up tomorrow morning and crude has gone to 80, 90, you shouldn't wait for the net effect to hit your people. Some planning would need to be triggered, and I think that the Ministry of Energy and Green Transition will be taking note of these things and act accordingly.
Thank you so much. Thank you so much. Executive Secretary of COPEC, Duncan Amoah. I am grateful speaking to us here on Business Live. And on the back of that, the Chief Executive Officer of Oil Marketing Companies, Dr. Rivison Opon, is forecasting a rise in pump prices by Monday due to the 1 cedi levy increment per litre on fuel. Now, however, he revealed that the ongoing tensions in the Middle East have not yet had an impact on Ghana at this time. His comment follows government's introduction of the 1 cedi levy on a litre of oil or fuel and other concerns over the potential impact of the Middle East tensions.
we assume that everything is equal with the current plat prices, because at the plat level, nothing has changed today, okay? So we are forecasting next week, Monday, based on the 2 weeks window that we have experienced, okay? So since nothing has happened in the market in Ghana now, we are assuming so. All that we are saying is that the plat price went up just a bit. CD has performed very well, and all that. So we are assuming that we are still within the same pricing window that we have experienced in the past week. However, with the addition of the 1 CD, indeed, we are seeing an incremental of 10% increase in the floor price, and that will surely reflect in the pump price. So the caveat I'm giving you now is that we are just assuming that BDCs and OMCs will sell next week's stock even when the plat prices go up as old stock. That's the caveat I'm giving. But if things are not the same, then it might change. But for sure, in the second week of the second window of this month, things will surely go up. I mean, the price will surely go up.
Boateng is calling on the Ministry of Finance to include the potential risk of crude oil price increases arising from tensions in the Middle East in the mid-year budget review. According to him, this will better position the nation to withstand any shocks that may arise. His comment follows growing concerns over the impact of the Middle East tensions on global crude oil prices.
Looking at what happened this morning and yesterday, I think it has been triggered by Israel attack on Iran. And as a net importer of oil, a country that is a net importer of oil, anytime there is a challenge in the Middle East, it affects oil prices, and we face some kind of challenge. But as to whether it is going to continue will depend on a number of factors. One, it depends on how long this escalation of war in the Middle East will continue. Remember that Israel and Gaza have been fighting for more than 1 year. I think it's about 1.5 years. It hasn't actually affected oil prices, but now Iran has been brought in. I think it will have some kind of effect. Two, it also depends on how the OPEC countries will also react. So if indeed it's going to bring down oil production from Iran and other countries, maybe we expect Saudi Arabia and others to also increase their supply. So it depends on how members in the OPEC group will react. And three, it also depends on how our managers in the domestic economy will also prepare themselves. And I expect that in our next year review of the budget, I think the Minister of Finance should be able to take this risk that is facing us in there, and we'll be able to know whether we'll be able to withstand this kind of shocks that is coming.
I want to stay all longer within the energy space because government says the country is making significant progress in its clean energy transition with a focus on fostering sustainable energy solutions. According to the Deputy Minister of Energy and Green Transitions, Richard Jan Mensah, the country aims to achieve net zero energy-related carbon emissions by 2060, a decade ahead of its initial target of 2070. Speaking at the 5th edition of the Canada-Ghana Chamber of Commerce CEOs Connect, Mr. Jan Mensah noted that collaboration will be intensified to achieve the set target.
We see enormous potentials for mutual gains through clean energy cooperation, particularly in the following area: in low carbon fuel development, technology transfer and innovation, capacity building and policy dialogue, and green financing and project development. Canada's financial institutions and ESG-focused investments can help direct clean energy ventures in Ghana and across West Africa, including carbon trading mechanism under our local market scheme. To support such collaboration, Ghana has committed to policy stability and regulatory clarity, particularly for independent power producers and fuel suppliers. We have institutional strengthening to support measurement, reporting, and verification of carbon reduction. We also streamline permits and licensing for energy sector investments. Ghana is developing and operationalizing the robust public-private partnership model and risk mitigation instruments. Finally, the participation in regional energy market through the ECOWAS framework, providing access to broader West African clean energy economy. Ladies and gentlemen, the opportunities are clear, and what we need now is decisive action. And I want us to look at this point that this meeting and this discussion should not be the usual meetings and the discussions that we have. It should actually be a launchpad for concrete collaboration. Canadian firms seeking growth in emerging markets should look to Ghana and not just a destination.
This is still Business Life. We have more for you after this break. Hello again. The International Monetary Fund has revealed that its executive board will meet to consider Ghana's fourth program early next month. Now, it is coming after government passed the fourth review assessment at the staff level pending the board's consideration. Julie Kozak is Director of Communications at the International Monetary Fund and has been speaking at a news conference.
So again, stepping back to where we are on Ghana, on April 15th, the IMF staff and the Ghanaian authorities reached staff level agreement on the fourth review of Ghana's extended credit facility. Upon approval by our executive board, Ghana would be scheduled to receive about $370 million US, bringing total support under the ECF to $2.4 billion since May of 2023. We anticipate bringing review to our board in early July, so in just a few weeks.
And government has justified its decision not to extend Ghana's program with the fund in May next year. And this has been pushed by some economists, or there's been some push by economists calling for an extension after it elapses to help stabilize the economy. But economic advisor to the president, Seth Tekpe, insists the time has come to also explore homegrown policies.
So let us continue to the fifth review and do it well. I think there are 6 reviews, right?
Yeah.
Let us go to the sixth review, April, and as the president said, let us, and it will be my wish that Ghanaians, devise their own homegrown policy for resolving, our problems. Such that, as the president said, let's begin. We are not going to be defiant and say no. What the president says is that countries are adopting the PSI as a step. Right, so let us adopt the PSI. Let's involve the fund. After all, we are members of the fund, so that it should only be in the most critical of situations, like global crisis.
Some will say that it would aid in the confidence building of the economy when the board should approve the money for it to come you on track and all those things.
George, me and you, weren't our parents, happy? They got some relief, but when they're happy, the first day you came to tell me that you had a job.
Just a little bit of it.
So that you had a job with,
In 30 seconds, the fund is also saying that because of the way the city has appreciated, they could be revising some of the target because of the impact on the program as well. That should come out good news for you as well, in terms of, because you look at the GDP ratio, the timelines, you are meeting all those targets even before the program ends.
I would say that all of Ghanaians should be proud about that, right? That we have come this far. Ghanaians should therefore, we should commit and therefore begin to think that maybe this thing about controlling our own destiny is feasible.
And to some other stories, the African Development Bank says it has identified some key areas of government's 24-hour economic policy to drive its implementation. Speaking at a press conference, Vice President of the bank in charge of infrastructure and industries, Solomon Kwenu, said the bank is planning to release some funds to support the full realization of the policy. James Eshen reports.
The Development Bank has been outlining some key 5 areas of Ghana's economy to support and also to collaborate. I'm engaging the media. Vice President Samuel Kweno has been describing Ghana's 24-hour economy as very innovative, and hence the bank intends to support Ghana's quest to ensure that this 24-hour economy cut across various sectors within the space.
The second is supporting the visionary 24-hour economy initiative. The 24-hour economy initiative looks promising and has tremendous potential to transform Ghana's economy. This is a highly visionary concept that has captured our attention and also our enthusiasm. We conducted a series of intensive working sessions with Mr. Guzitano, the 24-Hour Economy Secretariat, the Ghana Infrastructure Investment Fund, and several other partners, and have identified concrete areas where the bank can provide meaningful support to drive implementation.
The bank has also been promising to release some funds to support Ghana's economy. I mean, the Vice President, Solomon Kwenu, said this will be happening anytime soon after identifying some of these projects within the space.
The third area is advancing transport infrastructure development. Transport infrastructure development represents one of our core areas of strength as the African Development Bank, as we have demonstrated through numerous successful projects across the continent. During this mission, we engaged with the Ministry of Roads and Highways, also the Ghana Ports and Harbour Authority, and the PPP unit at the Ministry of Finance. And we do believe that we are aligned with the priority projects outlined in the Big Push Infrastructure Initiative, and we will be exploring these.
Right, the African Development Bank says it is here to forge some key partnership with Ghana, and also to ensure that these partnerships, come with some tangible results. For Joy Business, James Ishen.
Thanks so much for your company. I am Pius Kojobaka. We have more for you when you log on to myjoyonline.com/business. Beyond the Numbers is next.